We're in the middle of a winter season for startups where funding has dried up. Venture capital firms are becoming wary. There is no more FOMO, fear of missing out. There is no more term sheet signing in 48 hours. Startups are being told to focus more on their cash runway to stop the cash burn. We at Startup Central don't really cover funding news, but when you do see a big check, you think it's good time to do it, to check in what's different with this startup, what's unique about this startup that has been able to raise funds, well, in the middle of the winter season. Innoviti is such a startup. It's raised $45 million in a round led by Panthera Capital. What does Innoviti do? It says it's a collaborative commerce platform. It helps digital businesses to collaborate with each other and collaborate and onboard customers. The CEO, Rajeev Agrawal, here with us to talk more about that $45 million check. Rajeev, welcome to Startup Central. Tell us more about this funding. How did you manage it in the winter season? Did you get the valuation that Innoviti was seeking? Did you have to raise less than you had intended, or did you end up raising more than you had intended?
Thank you, Nayantara. Thanks, first of all, for having us on the show, and thanks for your congratulations. So as far as the fundraise goes, we were in works on this fundraise for the past few months. For good companies, I guess it's a question of making sure that you are able to raise money whenever you need it. I don't think there's a shortage of capital for companies which are based on solid foundations and are generating genuine value for the customers. So to that extent, I don't think we face any challenges in raising the funds. We had planned out to raise between $35 to $40 million, but we did raise a little more. We thought, given the current conditions, it's better to have a little excess capital on the cap table. So that's where it was. And we are all excited, looking forward to the next couple of years.
What's the cap table really going to look like? The new investors that are joining the cap table, what does it signify?
Yeah, sure. So, the round has been led by Panthera Growth Partners. They are a Singapore-based fund, and they have been active in the Indian space. They have some very interesting assets like Big Basket, Zivame, and others. We decided to partner with them, given their entire history of building extremely valuable, long-lasting businesses. We felt that was strongly aligning with our own culture. Besides that, we have Alumni Ventures, which is a very interesting fund that has the money of alumnus of Harvard, MIT, Stanford, and many other premium marquee institutions of the US. And besides that, the Patni family office, which is the Patni family of India. So they were the ones who were participating in this fund round. Besides that, the existing investors, that's FMO from Netherlands and Bessemer Venture Partners from US also participated in.
Tell us more about the business plan. If I go through your press release, you say that more than 20,000 retailers from 2,000 cities are on the Innoviti platform, and that you handle more than 90 million unique customer purchases each year, processing over $10 billion in annualized purchase volumes. What does all of this really mean? And what will the ONDC, when it's out and is being built by the government, what is it going to mean for Innoviti?
Thanks. That's a rather interesting question, if I may say. So let me share with you a little bit of the problem that we're trying to solve. So if you see what the past 10 years, and I'm giving in the Indian context, the past 10 years, what's happened is that a lot of the digital technologies, digital marketing technologies, be it Google or Facebook, have made it easy for businesses to go ahead and touch their target consumer. But what they did not realize is that it has done the same for their competition too. The result is that today, businesses are able to reach the target consumer, leading to an explosion of choices for the consumer. But conversion of the consumer is still not easy. So to acquire the customer, you still have to spend a lot of money through discounts, deep discounts, through all kinds of offers, freebies, and whatnot. And that's evident in a large number of startups and digital businesses struggling for unit economics, struggling for profitability. So in a sense, the digital technologies helped in terms of reaching your customer, but conversion of the customer still remains a challenge. Now, this exact problem is what we are trying to solve in a rather unique way, if you like. So what we are doing is that we are helping these businesses partner with other businesses who also want to access the same consumer. So imagine that you have a merchant and you have a brand. Let's say the merchant could be a store in Vivek Nagar. The brand could be maybe an FMCG brand that the customer wants to buy. And at the same time, you have digital payment instruments. It could be a bank's payment instrument, or it could be a UPI instrument. Now, all these three parties want to target that same consumer, want that consumer to buy the FMCG product at that retailer, maybe using a UPI instrument, but they're talking to the consumer independently. We bring them together. In bringing them together, what happens is that the chances of conversion improve because the customer could be maybe loyal to the brand, or maybe he could be loyal to the merchant, and therefore the chances of conversion improve. And second thing is they all share the cost of conversion, and therefore the cost of conversion drops. So this is what we have done through our collaborative commerce platform. In many ways, we are actually very excited with what ONDC has done, and we are looking forward to participating in the ONDC framework also, because what ONDC is solving is a related problem, but an independent problem, which is one of helping these merchants get discovered better. Otherwise, for the merchants to get discovered, they had to shell out a significant amount of their margin to various kinds of marketplaces. So what ONDC is doing is democratizing discoverability. What we are doing is democratizing access to marketing budgets so that your discoverability can translate into better conversion. So we are actually looking at, in a sense, adding on to what ONDC is already doing and making it far easier for smaller merchants to be able to access customers and convert them more profitably.
Well, since you brought up the word profitability, it brings me to my next question. Growth at any cost, or your target is to become profitable? We are in the middle of a winter season. There is now a new obsession of looking at the bottom line and reducing the cash burn.
Oh no, we are in that sense a very, very frugal middle class Indian company, if you like. We operate at very healthy gross margins of 68%. Our enterprise business, which manages purchase transactions almost about 79,000 crores a year across the largest of retailers in the country, that business is profitable. It's been profitable for a good 2 years. And you're right, there is a change in the way investors are looking at businesses today, and that's probably one of the reasons that they were attracted to our kind of a business, which is working on solid unit economics. For example, we have not lost a single customer in the last 5 years. 68% gross margins, looking at growth 70% year on year. The total amount of funds that we have raised are a fraction of the kind of funds that people raise in the market to reach maybe 1/10 of a business scale. So yes, investors have become more conscious, and I think they should, because making money in India is not easy. India is a tough market, and it's important that you are adding genuine value, lasting value, which will translate into profits.
Rajeev, your press release also says, and I'm quoting from it, launched in 2021, Innoviti's Genie product for mid-market mobile retailers has seen a runway success of providing attractive affordability like EMI and BNPL solutions, buy now, pay later. With what all is being talked about, the digital lending framework that's coming out, the RBI, wanting to look more closely and regulate fintech, I'm wondering what's going to happen to this product and this business model of yours.
Yeah. So we are distributors of the loan. We neither lend from our pocket, nor do we try to create any, how shall I call it, fancy instruments which could be perceived as as something else, but underlying that they're creating loans. We are playing a simple job of a distributor of loans, meaning the same way as in the early days you would have a person standing outside an ATM branch, if you like, or in a shop and saying, and if you want to buy something, they will help you with the paperwork. What you've done is to just digitize all of that and convert that into a transaction. So instead of a person standing out there, there is a bit of information that is entered in. We don't lend from our books. Finally, the lending still happens from a bank or a credit card issuer or a debit card issuer, as the case may be. So we are a pure technology provider, which is digitizing the process of lending. And that's an interesting space because essentially we are helping the banks reach more consumers. That's what is happening. So it is only improving the availability of the lending lines to the consumers on one side and helping the banks distribute more. So we have a humble job of a distributor.
Okay, Rajeev, we're going to leave it at that. Many thanks for joining us today on ET Now. Here's wishing you and the entire team at Innoviti all the very best.
Thank you so much, Nandara. Thank you so much.